If you think about it, we're also anxious. Bitcoin's value dropped the most against ETH in the summer of 2020. We're still not there. It's still May. It really started doing better in September and October, and 2021 was its best year. When it comes to crypto spring, the first part is always about how Bitcoin does better than other coins and the new kid on the block, Solana. There's something interesting about it that gets more interesting to me as more people lose hope in it. I don't think it does better than Solana, so it won't change my mind about investing in Solana, but I do think it will do better than people think it will over the next 18 months. CoinMarketCap says that Ethereum, the coin that runs on the Ethereum network, has gone up about 30% in the last week. The news that the U.S. Securities and Exchange Commission (SEC) has changed its mind about approving spot Ethereum ETFs is what caused this rise. After the SEC approved 11 spot Bitcoin ETFs in January, there was a lot of talk about spot ETFs based on Ethereum. But people became less hopeful when they heard that the government body wasn't paying as much attention to Ethereum ETF applications as it was to Bitcoin ETF applications. It was only last year that Bloomberg ETF analyst James Sifafart and Eric Balchunas said that Bitcoin ETFs had a 90% chance of being approved. This year, they quickly lowered that chance to 25% for Ethereum ETFs. Balchunas said in a number of tweets that this choice was made because the SEC was moving more slowly and wasn't as interested in the Ethereum applications as they were in the Bitcoin applications. New rumors, on the other hand, say that the SEC is now more optimistic about the Ethereum ETF applications. Senior Bloomberg ETF analyst Eric Balchunas wrote on Twitter on Monday, "Update James Sifafart and I are raising our odds of spot Ether ETF approval to 75% from 25%. I've heard rumors this afternoon that the SEC might change its mind about this problem, which is becoming more and more political. Now everyone is rushing because they thought the same thing we did, they'd be turned down." Additionally, Balchunas said that the 75% chance could rise if the SEC sends more good signals about the applications. After hearing the news, a lot of people think that BlackRock and its powerful CEO Larry Fink are to blame for the SEC's quick change of heart. As one commenter on Balchunas' post said, BlackRock gets a spot Ethereum ETF if it wants one. Alex Thorne of Galaxy Digital thinks that the SEC will try to look good by calling only staked Ethereum a security. Thorne says that this will let the agency approve Ethereum ETFs without going against what it said earlier about why the top altcoin shouldn't be used. Traders and co-founders of Y named Mando and ONOSF recently talked with Raoul Pal, CEO of Real Vision, about his long-held Ethereum thesis, his view on Solana and Bitcoin, and the coming global liquidity expansion. As time goes on, let's say that more money starts to flow onto ETH because, after all, you can't be fired for using it, right? It's possible for more financial assets to be on the layer, but it will still start to gain value because financial assets move quickly and in large amounts. This story can change so quickly because the meme coin story is just a bunch of us who were born and raised in crypto. But new money pouring into the app side of what this technology does is what will really move this space forward. All I know is that when real services are added to a network, it tends to stay that way. You can compare it to other big layer ones that came out in the past. None of them reach all-time highs again because they never really got the network action. Solana has clearly shown that their product fits the market. If we take away everything that has to do with the space, these are companies that everyone owns that sell block space. That's all they do. Also, Solana sells good block room that can be used for many things. BTC and ETH are the same. Does it matter if it becomes boomer or not? I believe we should be careful not to force the way the space is now, which is mostly still driven by retail and stories rather than use cases. I believe this will change over time, and it will depend on who's building it. For example, if Disney builds their Web3 architecture on XYZs, it will be different. A lot more people will join, and every day there will be tens of millions of new transactions worth tens of millions of dollars. That's what we don't know yet, but it will change. I think the most important thing I've learned from this cycle is not to get attached to the darlings of the previous cycle and think, oh, this is the main thing. Probably going to be, I used to think it was Bitcoin and Ethereum, but now it feels like Bitcoin, Ethereum, and Solana. I think next cycle will be something else. To help me avoid falling into that trap, I just look at the cross rates of the charts, like the weekly charts. If something is breaking out versus ETH or Bitcoin and there's something going on, it's very interesting, and it tends to stay that way over a cycle. Currently, I'm looking at what the next big trade will be, since the last big trade was Solana. The next big trade will be either Monad, SWI, Celestia, or something else. I have no idea what it is, but I'm putting all of these charts next to Solana on my trading view because I'm not going to switch any money unless I can prove that it will do better than Solana. I see that WIF does better than Solana when I look at the chart. That's fine with me, but it comes with more risk. I put one against the other on everything. It's just noise, right? After every halving, there's a time I call crypto spring that ends and crypto summer that begins. During this time, prices tend to chop sideways, which is normal. But this market is hilarious because everyone goes crazy and thinks it's all over they trade in really stupid things that they shouldn't be doing. Then, just when everyone thinks it's done moving, it goes off even higher. To be honest, I've been thinking the same thing you are about this space's people. I mean, the space's mind is a lot like that of an 11-year-old. If you play all of this back and ask people what they're most afraid of, they'll say that something bad is going to happen, like the Chinese currency falling in value or something happening in Japan. Every single one of these leads to more cash when you play them all through. It's always more liquidity. The only time it's not is when the Fed and other central banks are tightening, which means they're taking liquidity out on purpose. Anything else just makes the drums sound better. And that's all I think about when everyone starts to freak out. But if China attacked Taiwan tomorrow, it would be the biggest money injection in history. This can also be looked at another way. I wrote about this in GMI, which I sent to you guys earlier late last week. If you look at what happened with commercial real estate, Credit Suisse, the yen, and the Chinese, there's one big story: there aren't enough dollars. And they keep moving around. After that, Yellen goes to China twice. You should know that she sells more bonds than anyone else in the world. She sells more bonds now than Mike Milken ever did. She has to sell bonds for a living. She needs to ask the Chinese, hey guys, can you buy our bonds? They will say yes, but we need dollars to buy our bonds, your bonds. We're screwed because we have debt deflation and all of our real estate developers are in debt dollars. China is being used as an example, and Japan is seen as a threat. Check out what's happening to their money. You will also have it happen. Japan really does need dollars. I just think that a dollar infusion will fix this because if it doesn't, China won't buy us things. It has to do with how trade around the world works. Janet fixed up the TGA. It's now her job to spend it. After she rebuilds it after tax season, there should be a $250 million to $1 billion drop, right? That's great news since Powell cut QTT by a huge amount, from $65 billion to $25 billion. The Fed has more cash on hand now. The ECB is going to lower rates. It's very clear now. The Fed will cut at some point, or at least the markets will start to price it in, and they're going to cut as fast as they can. There is also the election coming up. There have already been times when Biden talked about giving money away. The Chinese have said they want to buy $40 billion worth of homes. There's no better way to put it together. There is money coming into the economy and institutions that want to buy. Then there's speculation about meme coins, which makes it a perfect, enormous black hole for everyone to fall into. There's something for everyone.